now we'll call our final witness for today's hearing.
After questioning lower-level Goldman Sachs employees for more than 7 hours, senators on Capitol Hill finally got their chance to interrogate their star witness, Lloyd Blankfein, the company's chief executive officer. And in response to an aggressive examination, Blankfein downplayed the investment bank's role in the mortgage collapse, which plunged the U.S. economy into a recession.
The people who were coming to us for risk in the housing market wanted to have a security that gave them exposure to the housing market, and that's what they got. And it's unfortunate that the housing market went south very quickly, and so people lost money in it.
Earlier in the hearing, Senator Carl Levin, the ranking Democrat, pressed a former head of the Goldman Sachs mortgage department about whether he should have sold a mortgage investment that was so questionable it was described in a company email with a vulgarity.
June 22 is the date of this email. Boy, that Timberwolf was one deal. How much of that deal did you sell to your clients after June 22, 2007?
Mr. Chairman, I don't know the answer to that, but the price would have reflected levels that they wanted to invest in.
Oh, of course, but they don't know what's a. You didn't tell them you thought it was a deal?
Well, I didn't say that.
No. Who did? Your people, internally. You knew it was a deal, and that's what your email shows.
Profiting from human misery is not illegal in the United States. Still, a majority of Americans believe Goldman Sachs had a moral obligation to be more transparent. According to the Securities and Exchange Commission, or SEC, the company was selling risky mortgage assets to its clients, but at the very same time, it was betting those assets would fail. The government regulator also alleges that Goldman Sachs failed to disclose that to investors. They are allegations Fabrice Touré, the 31-year-old trader charged in the lawsuit, refused to acknowledge.
I deny categorically the SEC's allegations, and I will defend myself in court against this false claim.
But the U.S. regulators allege Touré did in fact market an investment designed to lose value and then boasted about it in company emails released in advance of the hearing. Conduct, the senators believe, calls into question the way Wall Street investment banks like Goldman Sachs do business.
There's no doubt their behavior was unethical, and the American people will render a judgment as well as the courts.
The grilling of Goldman Sachs executives comes as the U.S. Senate is trying to start debating financial reform legislation aimed at regulating financial institutions and preventing another economic meltdown. Its passage is a priority for the White House. Kimberly Halkett, Al Jazeera, Washington.